Good morning, students. A very warm welcome. I'm starting with accountancy, the basics of accountancy. First of all, one should know what is a transaction. A transaction is basically a financial event. I'll write it out. Transaction. So what's a transaction? A financial event. Now, what do we mean by a financial event? It means any happening in terms of money, any happening which we can measure in terms of money, like a shopkeeper sells goods, he purchases goods. Goods are the articles basically in which a businessman deals. Okay, then, or for that matter, payment of salary to the staff, we're paying in terms of money, that's also an event. Then we have to actually record all these, whether it's a small business or it's a big business, we have to record all these transactions in a register or in the books of accounts basically, and that process is called bookkeeping. So the next term which we need to do is bookkeeping. What's bookkeeping? Recording of transactions in the books of the business. In the books of the business. Why are we recording so? The purpose is, as in Hindi we say, all that hisab kitab, paise ka len den, we must record. Otherwise what happens, the owner tends to forget. For example, if I have sold goods on credit to various customers and if I don't record on which date I sold, for how much, what was the amount of goods sold on credit to various customers, then what will happen? I will forget as to from which customer I have to recover how much amount. I might forget to remind them and therefore I might suffer a loss. So it's very important that we record all the transactions. Thereafter, we move on to the next term, that is accounting. Now, accounting basically includes bookkeeping. The second term, that is bookkeeping. So, accounting, it includes bookkeeping. Then I'm writing classifying. Classifying, students, means basically sorting out into various groups. Now here, what kind of classifying are we going to do? For example, we have two kinds of transactions. One is cash transaction and the other is credit transaction. In Hindi we say cash transaction, nakad ka transaction, and credit transaction means udhar. Okay, so we can classify in accounts, we can classify as to these are cash transactions and these are credit transactions. Then we do something called summarizing. Now, what's summarizing? In English, you must have done summary writings. Summarizing means writing in short. Okay, so at the end of the year, bookkeeping is done throughout the year. At the end of a particular year, the businessman is interested to know whether his business has made a profit or a loss. So a summary is prepared. In that summary, we record, all the expenses incurred and all the incomes earned. On one hand, the expenses, and on the other hand, income. If income is more than the expenses, that results in a profit. We'll talk about that. So, summarizing and interpreting. The results just a moment. The results there's this L and results, the spelling got wrong. Now, what are the results? What do you mean by interpreting? Interpreting basically means deriving conclusion, deducting. For example, in the case of a report card, the parent has gone to a PTM, and in the report card he sees, red mark. What does red mark indicate? Red mark indicates that the child has failed. Okay, so that's just an example. So as a result of summarizing of the accounts at the end of the year, profits and losses are profits or losses are calculated, and then the results are interpreted. Results means the results of all the transactions which have been conducted throughout the year, we interpret as to whether the business is in profit or in loss. Okay, and also we interpret the financial health of the business. We'll talk all about that in detail later on. So that is what accounting is. Then we must know about the basic accounting terms, basic accounting terms. So first of all, you should know what are assets. So assets are basically things of value owned by a business, or in short, things are valuable things owned by a business, like could be the shop building, the furniture. Okay, for that matter, even the bank balance, money is also asset. There's another definition, or anything that would give benefit to the business in future. Is an asset. And what kind of benefit? In the form of income. Okay, so manufacturer, suppose he buys a machinery. With the help of that machinery, he is going to set up his business. He's going to produce goods for many years to come, and those goods he'll sell and make money. So that's an asset. Then we move on to the next term. I'll scroll the screen, and that is capital. Okay, no one can start a business without money. Okay, so what is capital? Money invested in the business by the owner. So suppose a person, Rakesh, starts a business by investing rupees 5 lakh. Okay, so 5 lakh is his capital. Then the next term is liability. Liability is any amount which a businessman has borrowed or which a business has borrowed from outsiders. Okay. And when you have borrowed from outsiders, the business has to basically return this money after a particular time. For example, a businessman may borrow a loan from a bank. Okay. So with the condition that he is going to return this loan to the bank after a number of years. So this is a bank loan is an example of a liability. Or for that matter, a businessman might buy goods from the supplier on credit with the promise that I'll return the money, I'll repay the money for the goods bought after 3 months. So that's another example of a liability. So what's liability? We can say that money borrowed by a business from outsiders, or amounts payable by a business to outsiders. Okay. Then we have another term, expense. The term expense in Hindi you say kharcha. Okay. So when we spend money with the motive to obtain a benefit in return, that is called expense. And children, whenever we spend money, what happens? We pay money from a wallet. Money goes out. That's outflow of money basically. So expense, we can say outflow of money which gives benefit in return. Okay. And then there's another term, for example, example of expense, advertising. Business firms spend money on advertising, lots of money they spend on advertising, but what's the benefit in return? The brand of the company, the product, the brand name of the product which they are advertising becomes popular, the sales grow, and thereby the company is able to earn more profit. That's an example of expense. Another example is salary paid to the employees. So employees are working hard for the business. That's the benefit we are getting in return of paying the salary. Another example of expense. Okay. Next one is loss. Loss is basically outflow of money without giving any benefit in return. Okay. So outflow of money, or could be money's worth, any valuable thing which has moved out of the business but without giving any benefit in return. Okay, that's loss. We just get frustrated when there's a loss. So outflow of money without any benefit in return.